Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, and Dennis Dick with you this morning. It is one of those mornings trying to find some reason to be positive, but there isn't much reason to be positive out there. Every chart on the 5-day looks kind of the same. Right? It's down. It's down. So we'll talk about that. We'll talk about how to know when you're wrong, conviction versus fluidity and flexibility. We can talk about the psychological aspect of being right but early or wrong. How do you know the difference? What's the difference between being early and being wrong? Got some individual news to discuss. Rite Aid came out with some guidance. It was bad. We had some earnings on our radar. Chinese stocks are getting just smoked here this morning. Alibaba, Baidu, basically anything in China is getting hit hard overnight. We'll talk about that. We'll talk about all this with our guest as well, Buck Andrews, the co-founder of Inform. Today's show is also sponsored by Inform. Go to in4m.info. The link is up on the screen at the bottom right there. Let's throw it to Joel now. Joel, give us some levels to lean on here, please. Good morning.
Good morning, Spencer. We're down 13 3/4 handles at 38.67 1/4. We took out the low from last week. We were hanging green on just until about 7 o'clock, and people came in with their selling shoes on. Pre-market low 62 1/4. Don't have anything down there, folks. We got some lows from earlier in the March. They're closer to 38.50. We'll see if we can get down to those levels today. Crude up and down, up and down. Today's a down day, down a $1.80 at 59.39. You have gold in the red by 540. It's 1727.80. Silver, that's going the same way. That's down 56 cents, under $25 at 24.67. And Bitcoin, we lost at 55,000 support, folks. We're down $2,340 at 52,305. Triple D, I know you're doing battle here with the market. I thought yesterday was just a really tough day too. We had a couple breaks and it was like, man, we're going down. And then they ripped the thing 15, 20 handles north.
Yeah, it's hard on the short. I mean, you can say it's really hard on the longs. The shorts, it's been hard on everyone. Like, I mean, you get in here and you're thinking, okay, I put on some shorts. I'm like, I can feel like we're going down, but you're right. There's ripping little rallies in there. That really, like even yesterday morning, we ripped it all morning, and you're like second guessing yourself. And, you just got to hold through it. Diamond hands on the short side is working right now, and it continues to work. I came in heavy short overnight. I was like, I had a feeling we were going to get follow through. I came in heavy short overnight, and usually I remain hedged in my overnight portfolio, but I was like, no, I'm going to come in short because I think we get hammered tomorrow. And we're up all night. We're up, the entire night. And I'm like, in here at 6:30, and I'm like, we're up again. I'm like, all right, I'm wrong, and I started covering some stuff, and the covers were just terrible timing because we basically puked right after I started covering some stuff. So terrible trading by me. I had the good instincts to think to go short overnight, and I screwed it up. But, that happens. I mean, this is the way these markets are. You're going to make good calls sometimes, and you're going to actually lose money on those good calls because, you didn't hold well enough or you second-guessed yourself. Usually, if you've been trading a long time, it's your initial instincts are often correct. But, I mean, this is the market we're in. People haven't dealt with this before. Like, let's just set up the cues for you here. And, I don't want to come on and spook everyone here. I'm just saying we've been saying this for weeks. It's time to, be greedy was a couple months ago. It's time to be protective of your capital. And, and that's what I've done, in my own long-term portfolio. I raised as much cash as I want to raise. and so now I've got, more cash if we really start to get ugly. But look at the chart of the Qs, Joel. Bring up the QQQ on the 3-month. What do you see? What do you see? Or the 4-month, which chart? And when you get the four charts,
we've had a tremendous run. And boy, I mean, I put the 50% retracement on there, that big break, and it got through there a little bit, but then it just like 325. You see 1, 2, 3, 4, 5, 6 highs in the same area. I mean, for something like the Qs, the liquidity in there, so it just looks like you got another leg down here. I mean, you were at 340 to 40 points. I mean, you take 40 points off 320, you're talking 280 easy here. It's just been too easy on the upside. Monthly 300 looks like a huge number. We're 310. The expiration turn, I'm bearish for the next 3 months. There's nothing. I mean, it's tough. It's tough to trade on the short side, but we've turned, and I think at least for 3 months we got a down cycle. We've been straight up for a year.
And we've been straight up not for a year, Joel. We've been straight up for 10 years. It's a 10-year bull market. And you know what? The bears, have been trying to call top on this for a long time. That Qs to me looks like a head and shoulders. If you want to get all patterning, you got the whole left shoulder there from January, you got the head up in February, and you got the whole right shoulder formed now in March.
How about another other shoulder?
Look at that bottom right chart. Look at the bottom right one. You don't even see the sell-off yet. You can't even see a sell-off yet. So don't think, when's the pain going to stop? If it gets ugly, the pain hasn't even started. If it wants to get ugly, I don't know. Maybe we're just going to come right back. We still have a lot of things going for us. The Fed, printing money. The printing press hasn't stopped. They're going to come and defend the market as much as they can. So it's hard to get full on bearish. But you look at that chart right there, it doesn't even look bearish yet. So you can say, okay, well, trend's holding. We still might as well be long stocks. And, that might be the case. But, it's been such an overextended run. What worries me more than the charts and the technicals is the sentiment, where you have now money flying into value. And you've seen this for the last, 2 months, whether it was Reddit or whatever it was. But growth has been out of favor for a while. And this QQQ chart, doesn't do justice to the growth stocks. The stocks like Zoom, the stocks that, are supposedly supposed to be carrying us higher. These have been leading us down for a month and a half. You've had so many warnings, not just from our show, but even in the technicals about the growth names rolling over. Growth, some of these stocks have been cut in half. I mean, money is still rotating. And money is rotating. Oh, yeah, they can. Money is rotating and keeping the SPY up. I mean, that's why SPY does not fall down. Yesterday, it's the, defensive names. You had some healthcare stocks. You had, consumer staples having a good day. You had Home Depot having a good day. I mean, it was like playing defense again, the markets. But putting it all in perspective, this market has not even started selling off. It hasn't even started. If you're all growth, you're hammered. It's true. But you should never be all growth. You never want to be all the same type of stock. This is where diversification saves you. Is that, if you've got some, value names, you got some different names in there, those have been holding up. My overall concern is that what if they start selling everything? What if they, all of a sudden decide like, okay, well, it's getting ugly when I start selling everything. That's where it could get ugly. But right now, if you're sitting in SPY and saying, when is the pain going to stop? The pain never came for SPY. There's been no pain yet. You're not even in a downtrend. You're nothing in SPY. You haven't even seen a start of a sell-off in SPY. So I don't know if that can happen. I like the rotation might just keep us higher. That's why I haven't liquidated my long-term portfolio. I just raised cash because there's a lot of alarm bells still ringing. So raising cash and having some cash as a cushion right now is a good thing. Not getting all short. People say, as soon as I say anything bearish, they're like, oh, some short's talking his book. I mean, I stay long the overall market always in my long-term portfolio. Yeah, I swing day trade short long, but I'm overall long the market. So, I'm just calling it how I see it that, we have a lot of warning signs here and the market isn't pricing any of that in yet. growth names have been hammered, but that's the only thing that's been hammered. But you think you're safe in value, you look at a stock like Viacom when it did the last 3 days.
Viacom.
What the heck happened with that? What the heck?
What the heck happened when it went from 30 to 100, Joel?
No, I know, but the offering was 85. I mean, are those people just hung out to dry at 85?
We said it yesterday on the show. If this thing opens under 85, everybody who did that secondary and participated in it is stuck. What happens when people are stuck? This happens. Boom. Those people who were playing that offering and said, oh, yeah, I'm going to participate.
Why would
and they say, well, I'm not going to sell it at 84 because I don't want to lose $1. Well, now you just lost $19. So you got to read the tea leaves. That thing did not go over 85. It kissed it. It kissed it to the T on the high. Just a beautiful setup for a short trade. The setups are all on the short side lately. That was a beautiful setup.
That was 85. Crazy.
I wish I would have played it, but I'm trading other things, and
right.
You're bouncing around doing other things. I never really look back at it, but looking at it now, we talked about it on the pre-market prep show. All secondary people are caught. You have all the people caught from the previous day. It opens right, just below the secondary price and tries to get up over, and it can't do it. And then they just hammered it all day, and the people who participate in that secondary just hammered on it. So you got to be careful. It's not always free money just buying these secondaries.
No, and they hit Discovery on that too. I mean, yeah, I think that was part of it. I think also, sometimes you got geopolitical concerns. We were discussing this, I think, before you came on. Geopolitical concerns can hurt the market. Basically, the Suez Canal right now is blocked. Spencer, you got a little more detail on that?
Yeah, I don't even know how long it'll take to get this thing out of there, but the Suez Canal apparently accounts for 30% of global container ship traffic. And if you can't go through there, you got to go around the Cape of Africa, which takes an extra week. So, God only knows what the ramifications are for all these shipping containers that are now being delayed. But to Dennis's point, bringing it back to how to be actionable here. We talked about this all through the fall. All through the fall, we were in a buy the dip market. If you bought the dip last summer, last fall,
you kept making monny.
And 9 times out of 10, you made money.
No, 10 out of 10. It kept going up.
9.5 times.
It's 100% trade. You're buying the dip all the way up.
9.5 times. We'll
okay, sure. Nothing's 100%.
All right.
Maybe you picked the wrong stock.
So if you bought the dip, you made money. Congratulations. He's not saying sell all your stocks now. What he is saying is, maybe this isn't a buy the dip market right now. That's what he's saying.
No, it's not.
Yeah.
It's a sell the rip market. Every time we get a nice rally in stocks, it's another selling opportunity. You get a rally on your earnings stock, it's a nice selling opportunity. Let's go to Restoration Hardware here this morning. This thing was just an absolute gift last night. $535. Come on. I don't give a crap what the earnings report looks like. I don't give a crap that they blew the earnings away. What I give a crap on is you got a stock market that wants to sell stocks. This thing, they're buying it up at 530. Yeah, man, it's going to 600. Yeah. What kind of environment do you think you're in? You're not in that environment anymore. You're not in Kansas anymore, Dorothy. Let's, talk where we are. We're in a start of at least a bear market in some stocks. I'm not paying $50 on any stock on earnings. Up 50 on the earnings report. It's up 25 now. In literally, not even, for 6 hours or 8 hours of after hours trade, not even any regular sessions, already given half of it back. I mean, could it rally up? Could it do stuff? Yeah, there's going to be outliers. Maybe this is going to be the one that's going to continue to go. But again, selling that rip last night, somebody's up 25 points already. They're already up 25 points. So yeah. I wouldn't want to buy any stock up 50 points. Am I shorting Restoration Hardware here? I don't know. There's probably easier shorts out there. It did just beat, but when it's up 50, that's not a bad opportunity. And if I was long it, I'd be like, thank you. I can get out a stock near the all-time high right now. Any stock near the all-time high, I'm getting out. The key is to raise cash in the rallies if you're puking your guts out looking at your portfolio yesterday. You got to use the rallies to lighten up. If you're looking and you're fine with it, then you're fine with it. We very well, 5 years from now, might be a lot higher. But stocks aren't cheap. Don't go out there and buy in the dip thinking, oh, these stocks are so cheap. They're not cheap. These stocks are some of the most expensive stocks in the history of the stock market right now. You know, we're comparable to 1999. So don't start thinking that stocks are cheap. So I think you're raising cash on rallies in individual stocks as well. Using those rallies to raise cash is prudent right now, in my opinion.
No, I mean we're just like how close? I mean, we're 100 and but we're not even 100 points off the high. So I mean, it's it's nothing.
We haven't even started. This isn't even a sell-off yet. Everybody's just really upset because they're all in the same names, Joel. They're all in all the, and we keep saying Kathy's been, really hot. She's been hot for a couple years here.
Could she be like
those stocks have cooled off,
like an LTCM, long-term capital management? If she has to puke things out, I mean, she
bought so many stocks yesterday, Joel. She's not even close to puking out yet. She bought 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 stocks. She bought another 1 million shares of Palantir yesterday. Another 1 million. When we were getting, and this is how you can tell it's turned. When we were getting Kathy buying 1 million shares of Palantir, what did the stock do a month ago?
$5.
Went up 10%.
Yeah.
What is it doing this morning? The market's crickets. They're like, no, we're not going for it this time, because every time you've bought those Kathy Pops, which I've been telling you, don't buy the Kathy Pops for the last 3 weeks. It has been a fade trade. Not against Kathy. These are ridiculous moves that because somebody buys a stock, it's worth 10% more. It's not. So in normal markets, it's not. In this market, it's definitely not. So now you have people like, no, she's not even getting the pop in her stock. So when she's coming in and buying them, there's no Kathy Pops. Let's go through her stocks today. PDD she bought. PDD. 1.76%. Zero Kathy Pop. STGR. Oh, that one's flat, but it's actually offered down. So it's actually still down the day. RPTX, IONS, CDXS, ADPT.
Yeah, they're not really up.
Zoom.
Yep.
She bought more Zoom. She can't stop buying Zoom because she doesn't care about, how much it's the valuation. She's just buying growth at any cost. And if we go back into a raging bull market, you're going to be happy that you bought this stock too, and she'll be happy as well, because it's the bull market doesn't care about valuations. Bear markets do. So it all depends on where we are. But that's why, I've been through a few markets before, and just buying growth at any cost works very, 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 very well in a bull market. It works very, 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 very bad in a bear market. So it all depends on the type of market we're going into.
The one that I do see bid up here is Fate. She bought 136,000 shares of Fate yesterday for the ARKK. That one's bid up.
FATE?
Yeah, FATE.
No, it's offered down.
It's offered down?
There's an odd lot offering it flat. Okay, so it's offered $82 is offered. Nobody's lifting that offer. $81.98.
Okay.
So out of the 13 or 14 stocks, SPFR I think is trading higher. That's a SPAC. That was out of the blue. Was I think it was her first purchase there. Catchy actually with a good call on that one. From SPAC's attack. But again, this was 1070 last night. It's 1040. Already given back half the gains. I mean, SPACs are completely under attack. It's hard. Like I was dumping more SPACs yesterday. Even under 10, I was dumping some of them because you know what? This gets ugly to start hammering those too. So I just think you got to have some cash. If you're on margin right now, the time to get off margin was a couple weeks ago. If you're on margin still, I'm like, I don't know what you're doing.
Have you ever been on margin in your portfolio?
Never on my long-term portfolio. My trading account, yes.
Yeah.
Trading, yes. In my long-term investment account to buy on margin, if you're to stay, I'm just going to stay. Okay, the market goes up always, right? So I'm going to stay 200% invested always because that's what I can borrow. If you did that, over the last 25 years, you blew out your account at least twice. You blew it out in the tech bubble burst, and you blew it out in 2008, 2009 financial crisis when the markets fell 70%. So you blew out your account twice doing that. So if you stay 200% invested, it's almost inevitable that eventually you will blow out your account. So I don't like investing on margin for that reason. If you were just buying 100% stocks, you're up a lot of money from then. The S&Ps were down. Dow was down 10,000. Now we're at 30,000. So you've made a lot of money if you just stayed invested, even though you had an 81% drawdown NASDAQ in 2002, even though you had a 67% drawdown in the S&P or 55% or whatever it was during the financial crisis. You still made money because you can tough it out. If you're on margin, you can't. You're not playing with your own money. Your account goes down 50%, market goes down 50%, you're out. It's game over. So that's why I don't invest on margin. Trading on margin, you got
Different story.
That's risk management. You got a risk management. It's discipline. Getting out, cutting your losers. That's what people haven't had to do. They haven't had to have any discipline because the stocks always come back. Eventually, we're going to get into a market where you have to have some discipline and protect your capital. How do you were talking, Spencer, off the bat? How do you know when you're on the wrong side of the trade, or what do? You cut your losers. You cut them.
Yeah.
Don't worry. You cut your losses. It's okay to take a loss. It's okay to have losers. People who have 95 or 97% winners in their portfolio, or one in a raging bull market, or two, they just don't cut losers, or they don't, or 97% win rate. They just don't take their losers. So, yeah, there's, obviously in a bull market, people, like I was saying in my investment account when I looked at it back in January, you knew it was ridiculous. I had something like 100 stocks and 98 of them were up. It was stupid. So that's not normal market. It doesn't look like that now, I'll tell you, my long-term portfolio. There's a lot of losers in there now. So, I'm getting hit with you guys too. Don't just think I'm laughing here. My long-term portfolio gets whacked too. But if you're sitting with 30% cash, you're feeling a little bit better than you would be if you were heavily invested on margin right now.
And I remember talking about this a few months ago, but it's hard not to feel like a genius when everything's going up, right? You're like, oh, I'm so good at this, right?
Yeah.
Everything is green. Like there was a time, it's not now, but there was a time a few months ago where I was up in everything I owned. I was up, and I was like, oh my God,
I'm really good at this.
I must be amazing. No, that's never the case. It's never the case.
Everybody was up in everything.
Right, exactly.
If you were a long-only investor back in January and you had your accounts, you were likely up in the majority of your stocks. Everything was making highs. Even value had come back. We were calling it the bag holder bailout market, where stocks you were down with for years came back. Just giving gifts. The market was just raining gifts. You got to take those gifts, or the market will take them for you. So, you're exactly right. There's so many people that are saying, I've never had a losing trade. You won't believe this. I literally have people reaching out to me saying they've never had a losing trade before. Well, this shows you, I've been trading for 9 months in a straight up market. It's been pretty damn easy for the bulls. We're seeing some adversity here. I don't know where we're going to be 2 months from now or 3 months from now. I'm not going to make a call. We might be very well higher. This S&P is holding up tremendously well. Joel, it's tremendously well.
I know.
The rotation keeps us up. There is no fear out there. Christian Fromhert's tweeting it out. There's still more call buying than put buying going on. There is no fear out there yet. So that's why people who are getting really hammered right now, it might just be getting started. It could, bounce right back, and maybe this is another buy the dip opportunity, and it just might be the case. But what if it is what if it's May of 2000? What if it's July of 2007? We don't know. What if it is? Well, I want to have some cash just in case.
We talk about the leadership
right now.
The thing, a lot of it was, the leadership. And we talk about these big stocks because they're the one that let us out of the gutter, right? Apple, earnings. That pop you see, that thing was sold off a great earnings report, and then it hadn't been able to get off the mat. Same thing with Amazon. Amazon didn't get up to that all-time high, but it had the pop on it, and the Mr. Softy's holding up pretty well, and so was Google. But it's just the big boys, and I'm looking at them now, and it's like, and until those things turn. Now we do have earnings season starting in the next middle of next month, right?
Couple weeks.
It's going to be weird because the comparisons for a year ago, but pullbacks and corrections are good in the market if you are deploying your assets right. And the other thing Dennis is talking about is asset allocation, being on margin, being able to be prepared for different circumstances. It doesn't feel, look at where we were a year ago. And I for one would say there's no, we knew you were going to get a bounce, but to do what we did, it's just unbelievable. And whatever the factors are, we're not going to have the same, we're going to have a accommodative Fed, but we're not going to have the kind of Fed that we had last year. Rates can't go any lower. People are worried about inflation. So, just don't worry about a stock. And this is what I don't want people to do. Take a look at a stock like Viacom, and you bought it at 30 and it went to 100 and now it's at 66 and a half. And you're like, I can't sell it at 66 and a half because I'm losing $34.
Yeah.
Don't look at where things are. Look where your cost basis is. Look where your original target was. Because if you're looking at things like from the highs, man, that could be.
It's got to get back to the high. I'm not going to sell it unless I get the absolute high.
Yeah.
How do I get in, Spencer? I just was trying to get back into the chat here, but I go to pre-market prep, and I've had like literally a lot of emails about this too. I go there now to try to get the show, and it's like got some biotech, Benzinga small cap conference link. You can't even get in the pre-market prep show.
Well, if you hit
like from pre-market prep, the thing, I cannot even get in there right now.
That's probably unique to the last day or two, because we
okay, because I had multiple complaints like they can't find the show. There's people who can't find the show now. So I know you guys are doing multiple shows and stuff. It's just, when our pre-market prep show, you can't get in there. That's disappointing.
No, that's
so. If you've been struggling with it today, folks, I can't find the show either. So I don't know. Benzinga's gonna have to figure that out.
Thanks for that. No, I wasn't even aware of that. So
it's literally a Benzinga biotech conference that hasn't started in the pre-market prep link.
Thanks for that. I'm gonna make sure that gets fixed.
And I got that email like a couple days ago too from somebody. So there's definitely problems.
If you ever have any questions, anyone has any things like that, email us premarket@benzinga.com. All right, that email goes to all three of us. So premarket@benzinga.com. Anything about that, anything, questions, comments, concerns, and let us know.
Because I apologize, I'm not following the chat today. I can't find the show.
You can always find the show by going to youtube.com/Benzinga. Right, the show is always going to be if you go when we're live, you go to youtube.com/Benzinga. The show will always be at the top, right there. Right, maybe not the very top, but like right below that. Right, so that's where you can always find the show. Benzinga.com/premarket prep.
I'm in there now. 2,000 people are in here, so a few people found the show. It's just my stupidity. I guess I can't find it, but it wasn't on the pre-market prep site. So
we'll get that fixed.
Okay, cool.
All right.
Stocks. We want to do some individual stocks.
We could. I mean, to Dennis's point about the RH, the numbers are good. It doesn't matter. The same can't really. I guess you look at like Darden, right, and that's up this morning.
Let's sell it.
Still going up, and you look at KB Homes, which is down. But let's go to Darden here, because that one's actually up. Big this morning. The earnings were this morning. The numbers are what they are. There's a EPS beat, a sales beat. As far as guidance, that was above estimates for EPS and for sales. They announced a $500 million buyback, so they basically had good numbers across the board, plus the buyback. And the stock is up. The question is, do you chase it up here?
No, you don't chase stocks up $7 in bear markets. You sell them when stocks are up $7.
I don't know. How is this stock making a new all-time high?
How stupid is this market? And I'm ranting, but you got SeaWorld sitting up here at all-time highs. Like we're close to it. I mean, the parks aren't even bloody open yet, or if they are, they're not going to be full like there. Is that an all-time high for SeaWorld?
I think so.
$50. Yeah. This is the stupidest market I've ever seen in my life. So stupid. Stupidest market. Disney all-time highs because we got Disney Plus. Yay, $200. I mean, the parks are half full, there's still problems here. We still got a pandemic going on out there. Yes, the vaccine's coming. Yeah, maybe it's going to be this raging. Everybody's going to go do their stuff. But, I mean, there is gifts galore out there everywhere. Darden restaurants, too. I mean, this is Olive Garden. So you're telling me that Darden Restaurants and Olive Garden is now in better shape than it was before the pandemic. That's what you're telling me.
Well, it's interesting you bring that up, because maybe, and we can still stay on Darden, but Rite Aid is the same thing, right? And Rite Aid gave guidance, and they basically were like, oh, we're going back to losing money this year. Rite Aid made money last year, and they're like, no, we're going to go back to losing money this year. Right, so it's like the same question, right? Rite Aid, Darden restaurants, are they really in a better spot now than they were before the pandemic? Probably not. Probably not.
This market is so disconnected from reality. That's the problem. And if reality hits, these stocks are all significantly lower. I don't know if reality is going to hit, though. And that's why I'm not all cash. That's why I'm not short this market. Because I don't know if we're at the point of reality. Eventually, reality does hit, though. I don't know if that time is now, if we're in the process of it, or if we're just going to go back into a raging bull market again. I can't fight a Fed that prints in money, and I can't fight the inflation, which can inflate stocks as well. So it's hard to just go short stocks. But again, here's another opportunity: Darden Restaurants. If you got a pile of Darden Restaurants and you bought this, I mean, you've been given, this stock got down. We all thought everything was going under. $26 was just maybe stupid too. But, you bought this at 70 or 80 when you're thinking you're getting past it. I mean, it's been a fantastic run. This feels like a ring the register opportunity too.
I know. I mean, you're trading up here just under 141. What's this sneaky high right here? That's just over 140. Ooh, 141.35. That's your 3-day high right there. Keep an eye on that, folks. You don't get to that 141.35, or even a little better setup would be. It's like they run this to 142. They open it at 140 and a half, they jam it to 142, and then they come back down through that area. So there's a possible setup for Darden. And if you're looking for a trap door in this thing, it's staring you right in the face. Look at these lows. The low from yesterday, 134. I'll give you the exact number. What was the low from yesterday? Low from yesterday, 133.77. You got a low right here at 134. Another low at 133.80. Need I say more? And a lot of charts look like that. They went up. They came down. They're sitting on support. And the longer you hang out in the support area, the more chances you're going to take. And that's what happened in last week's low. We just too much, just leaning on it too much. S&Ps are getting off the mat as we speak.
Oh, yeah. The rotation will keep us higher. There's stocks trying to go higher.
We also got a couple data points out. The final Q4 GDP revision, GDP rose 4.3%.
All right.
In Q4. And we got jobless claims for last week, which came in better than expected, below estimates, right? Only 684,000 people filed for unemployment last week compared to a 730,000 estimate and the prior week of 770,000. So only 684,000 people filing for unemployment. Better than expected. GDP revised slightly upward. That may account for what you're seeing in the S&Ps over the last few minutes or so. But it's still a mess. Still a mess.
But the S&Ps are so resilient. The S&Ps are the opposite of a mess. I'm so impressed with the S&P, and this makes me want to just be like an S&P investor. I own a pile of SPY in the long-term portfolio because I'm not a long-term money manager. I'm a short-term money manager, and I can't pay attention to it. So the majority of my long-term wealth is indexed. People say, "Oh, that's dumb." Well, yeah, if you had a full-time job just managing your portfolio, I have a full-time job day trading. So I can't worry, continuously about that. So, I do work with the indexes, but the SPY has done exactly what it should do. I mean, the diversification of the SPY has kept this index better than any of the other ones.
It's my largest, by far my largest.
It's unbelievable. It's unbelievable how well it has held up. And with the carnage that's happened in growth, SPY has been unbelievably held up well. And that's just the rotation helping it. I mean, you got stocks like Procter & Gamble been going straight up for a month. So that helps. That's right in there, and that helps, despite, obviously you can see the market's playing defense there. Utilities have started coming back off the mat. They were dead back in the beginning of March, and they started to move too. So, I mean, the diversification of SPY is really where, if you're a SPY investor and you're down 2%, you're like, what are all these guys complaining about?
I know. 20-30%.
It's not there.
That kind of pisses me off, though. Okay, don't act like other people aren't getting smoked. All right, if you're someone like, oh, I don't see a bear market. I'm in SPY. There's no. Whoa, get off your SPY horse. All right, don't
no.
Or maybe you should get on the SPY horse.
No, because then I don't have to worry. Like you, Dennis, you buy so many stocks. You buy so many. I'm like, I'd be so nervous. You look at. I mean, you just. I mean, you're better. You got your CFA, you got your different indicators and stuff. But for me, I'm like, I can't beat the market. I just can't. And that's why, it's just too hard. It's too hard to beat Mr.
It's been really easy in the last 6 months. You're in some growth name, and you're like, why would I go and spy and making 10% a year when I can make 10% a day in some small cap stock that's flying.
I almost feel like just buying AT&T. That's what I feel like doing. That's what
this kind of stock that could get bought. I mean, still. But again, I just don't know if we start rolling over on everything yet. So that's why I'm like, I'm just sitting with cash right now. I don't think you got to be running and like throwing and you're missing out. You know what? This might be an opportunity to put some growth. But again, I said this the other day, and I'll say it again. If you are sitting with all value names and no growth, time to reallocate too. This is all time to reallocate because growth's been hammered. There is some growth stocks. Still, the valuations are nuts to me, so that's why I'm not buying them. But there are some growth names that are off, 50, 60% from the highs. I mean, look at Fastly. This was $120 a month ago. It's $63. It's $63. I mean, if you think, again, it's valuation for me. That's why I don't buy it. But if you think growth is going to come back into favor, there's a lot of stocks on sale. He's buying all these names. He thinks growth's coming back, and it might. She might be right. She bought more SE. She hadn't bought SE in a long time. This is a stock, we've talked about lots in the show. It was one of the best trading stocks last year.
Oh, it broke that monthly trend line. Where was I? Holy mackerel.
It got hammered, for $90 in the last month. It's off 30%.
Jeez, Murphy. I wish I would have put the date in on that one, but this thing is Hindsight Capital. Hey, where's our buddy Buck? How's he doing?
Here. Buck is here.
Help us, Buck.
We're all insane in here.
All right. Let's bring some sanity.
Hey, guys.
Buck, how are you?
Good. How are you doing?
Buck likes all the markets. You know what's good about Buck is he's always smiling. Even if Buck's losing money, I bet you he smiles. You always got a good smile on your face. But I like.
Well, you're always going to lose some money there, aren't you?
It's just numbers, right? That's really the end of the day.
We have our good days and our bad days. It's just a matter of clawing our way back, right?
That's what you got to do. You're going to fight out. You're going to be in trouble some days, and you're going to be having good days. Sometimes you can't do anything wrong. Sometimes you can't do anything right. But if you can find a way to smile on those really bad days, I still have to figure that out after 20 years. But
Dennis, you're the best when you're losing money. You got the best attitude. You laugh when you're getting killed on stuff, and you got a great attitude. I don't
know about that.
They do. Well, you were a little snippy yesterday, but that's okay. I don't mind. I mean, you can be snippy every once in a while. But Buck, what should we do? Buy the dip? Go on margin?
I think you guys kind of have it right. I mean, we're in the middle of a pretty nasty bear market on these stay-at-home tech stocks, right? I mean.
Tell my wife that. Yeah. Tell my wife that.
I mean, these things. I mean, it's a very ugly market. It's like for the tech, and especially stay-at-home tech, not for the big tech with like the Microsofts, like you said. But the stay-at-home tech is in a pretty nasty bear market. There's no doubt about that. And it's kind of interesting when you see the S&P is holding up, and that's why the VIX doesn't move to the upside. There's no protection by buying the VIX, by being, with this bear market. That's
very good point. Very good point on the VIX. Yeah, that's a great point on the VIX there.
So you've really got a bifurcated market, and it's if you're in tech, it's dangerous. But there are some ways to play it. I've found every time you get a hype on any of these tech stocks. So I've been using the buttons on our system for like the broker rating changes, and we're getting ready to put in a global broker rating change. So anything that's getting a broker rating change, you can pull it up, whether it's on your screen or not. And when those things get pops and they're green, and if it's a technology stock like Adobe yesterday, or apps, Digital Turbine. Those are great shorts in the morning when they were green, and you could have done really well. Anytime I see Ark green right now, hold on just 1 second.
Why did you just go green?
I've got this. Anytime I see Ark green, and we've had a little bit of a rally, and it's flat, flattening out on the open, and not, just kind of bumping against that high, can't make it through, I short them.
So here's a great example. Here's a great example of what Buck's talking about this morning. All right, Cisco, which got upgraded Goldman Sachs, and AMD, which got an upgrade at a smaller from Northland. AMD is giving it back. Cisco is not. yet.
Yeah, Cisco's not in that stay-at-home,
Okay,
like
fair.
Cisco's in the value
Fair.
trade that everyone wants.
Cisco.
Value tech.
Fine. But
Right.
still, tech upgrade, up, fade moves was my point.
Yes.
Okay.
Yeah, so that's essentially what we've been doing, and it works pretty well. And until this market changes, if I'm playing technology, that's where I'll play it. I'm not. You can't buy it. You can't buy these stay-at-home tech stocks because you can't buy and hold in this environment in that specific group.
So is there anything that you are buying? We know you're fading stay-at-home stocks when they're up. Is there anything you are buying, or are you just?
Well, I still own the green box. That's held in there up yesterday and the day before. It's just kind of basing out here, but there's not. That's a stock that's not owned by many people yet, right?
Is that GBOX? What is that?
Yeah, green box GBOX.
That was a SPAC, right?
No, it was not. It was not actually. It was a pink sheet that went to the Nasdaq.
Yes. Okay.
So, and I wouldn't touch the SPACs.
Yeah.
I mean, SPACs are under SPAC attack.
New lows just below here, folks. We're on the lows of the pre-market session, 38.60.50.
And something that everybody should be concerned about, the S&P has not turned. The overall market has not followed the Nasdaq down. The question is whether it will. I heard an interview from one of the senators saying that they are looking at a $5 trillion infrastructure bill that is full of pork and full of taxes. $5 trillion. Okay, so and I saw an interesting stat today on corporate taxes. If corporate taxes go to 25%, they make about $500 billion every 10 years. $500 billion every 10 years, going to 25%. 28%, they make $800 billion. That means to pay off, you're talking about 200 years to pay off this debt.
They're never paying it off.
Yeah, never paying it off.
Does this even?
I mean, come on.
So my point is, be careful.
Who needs infrastructure?
Like, does it I mean, we just keep digging the hole. We were saying, oh yeah, we didn't want to go over 20 trillion. Now it's approaching 30 trillion. Does it matter at this point in time? Does it eventually come and like we're just going to an eternal bear market because we've laden ourselves with so much debt? I mean, imagine if the U.S. and Canada for that matter too is the same thing, and Europe the same thing. Imagine if they were a corporation. Like, what
Sold.
would you be an investor as they just keep laying on more debt, laying on more debt, and laying on more debt?
No way. You wouldn't, right?
I don't think so.
And government doesn't care. It's like, it's just out of control. So eventually, this might catch up with us. Who knows? I don't think anybody really knows but I think eventually the policies and the debt catch up with growth. And right now we've got massive stimulus. That's temporary. Yeah. Pick up your pipe, take a hit, and wow, that feels pretty good now. But let's wait about 4 hours from now. And
take another hit.
Yeah. Joel's got it right.
There you go.
Yeah. Come on.
So eventually, that wears off. And what's interesting about this market is even with all the stimulus, the market's not going up.
So, Buck, is there anything that you actually got out of long term last week?
Yes. Yeah. I got out of, I trimmed out of, I'm way out of the, all of the Bitcoin, stocks. I've been out of those.
Mara, Riot, you've gotten out of all those?
I got out of those around 60 bucks. I got out of Can in the mid 20s.
Where's the buy the dip in Bitcoin? That's what we want to know.
Yeah, I've sold and gotten a little bit defensive on Bitcoin and cryptocurrencies because I don't like the way that's a sloppy trade also right now, and who knows whether it follows the Nasdaq down. I don't have in areas where we've got longer term portfolios. I'm looking for ways to collar. the VTIs and the
Explain that.
STYs.
Explain that, Buck. Explain the collar.
Yeah, so you sell a call and you buy a put, and essentially you do it on the exterior of the strike, of the current strike, and so you essentially use the sell of the call to pay for the put, and it's a pretty good way of hedging your position, depending upon how close you come into the actual price of that, where the stock is trading. And so anytime you do that kind of stuff, it's a little bit expensive, but the collar is less expensive. Selling futures against the portfolio, but they haven't done as well. And buying the VIX, which does nothing, until the S&P really starts.
Yeah. I've never been.
Nothing.
I don't know. I don't know. But my VIX is the S&P futures and the average daily ranges. Yeah. And man, I can remember it went to 150, 200, those crazy ranges. And then, we calmed down, and then on the way up, then we got tighter and tighter and tighter. We still, including the overnight range, it's still coming out today is 60 handles, but it's really hasn't exploded yet. I think that's when you really get worried. Like the action yesterday, just to me, just not good. I mean, and
you can't hold your head up. There's not been a rally that's been able to hold its head up in the Nasdaq. And it's really sloppy. Like every time, and the Dow had followed it down, up 300 and followed the Nasdaq down. I mean, it closed flat on the day, but it couldn't hold up, right? So the market action just doesn't look healthy.
What about GME? You buying the dip in GME?
No, I never trade GME.
It went down off earnings. Can you believe that?
Yeah.
What a shocker.
I would have liked to have shorted it into the earnings. I did look at the puts, but they were pretty expensive.
Oh yeah, they're very, very expensive.
I'm sure they just sucked the premium out of those the second.
What about the financials, Buck? I mean, they've had a great run. Bank of America got almost near $40, all predicated on higher interest rates coming, which Jerome says no. What do you think about something like a JP Morgan? I mean, that has just had an incredible run. Now it's pulling back.
They've had incredible runs, and they were pulling back. I missed it. I was in Citicorp down around $40 and didn't hold the position. And that was a mistake, So at this juncture, I think the financials have had a big move, just like, when I was on your show the other day, I was in Dow, I was in Deere, and I was in CAT. And that day, I think it was Deere that was up like $8 or something, and it came down and closed like down on the day. And at that point, I'm like, okay, that's it. And I took all those off for a small gain. So I don't know where they go from here. The question is, does the market follow the Nasdaq, or does the Nasdaq start to base out? And historically, these leading stocks lead the market, but who knows?
They're not.
Well,
they're not.
Does the market follow the Nasdaq? Does it follow the S&P? Does it follow the Nasdaq? Does it follow the S&P? Does it go sideways? Does it go down? That's the question. Buck Andrews is the co-founder of Inform. The link is up on the screen, inform.info, inform.info. Buck, always a pleasure. We'll talk to you again.
Thanks, Buck.
Yeah, hey, look, good talking to you guys.
All right. We got a couple questions. I'm sorry, Joe, go ahead.
We did the old undercut the low and rally, 16 and a quarter. You went to 59. I'm relying on numbers from the pivot point formula now, since I don't have any of my real support down until closer to 30.47. But a little bounce here, little bounce off that 59 low. Go ahead, Spence.
We got a couple questions about Tesla today.
Tesla.
Seems like people want to draw a line in the sand at like 600.
Don't draw any lines in the sand because they keep getting taken. There's not. This is going to test the 540 low. That's
I think it could too.
Yeah.
Go on the long-term chart on Tesla. Go look at it. Like, bring it up.
Yeah, people forget that Tesla moved sideways for 5 years. Or not sideways, it was range bound for 5 years.
But I'm just saying, we were $70 in March. Yeah, maybe that got, a little bit, dumb to the downside, but, $139, $150 in May. We're $630. The stock is still up 300% from where it was 1 year ago. It's, had an awesome run. There's still a lot of profit sitting in there. So could this come off another $200 and still be expensive? Absolutely. So I don't know if it's going to. Maybe, it's just going to be $3,000 like Kathy Wood says. But right now, the tape is not looking nice on Tesla either. So again,
it's gone down.
Knows, though.
It's gone down 70 points. Oh, no, it's gone down 90 points since that day that she, it almost got to 700 that day.
She popped at 40. Her call, her influence popped at 40 points. That was another gift for the shorts. It really was.
I mean, is that going to be, if she ever has to puke this stuff out, man, that's going to be the day.
I don't know if she's gonna. Like, they just keep throwing money at her, so it's hard to say.
She's buying puts or doing something.
No, she's just buying stocks, Joe. Look, again, we were talking about the stocks she bought. It's all high risk, high multiple. Zoom, SE, Palantir. She's going down with the ship. Like, if the growth ship goes down, she's gonna go down. She's gonna be the anchor on it. So I don't know if the growth ship's going down. It's obviously got taken on some water here, but there's still, we got the Fed that's probably going to bail it out. So it's hard to completely bet against Kathy. It's hard to completely bet against, growth. So I'm not coming in here telling you to short Tesla, but there is no way she's getting off the growth bandwagon. She's not coming in all of a sudden becoming a value investor.
No,
she's
not going to.
She's going with what she's going with. If growth continues to, she's going to do very well. If the market turns, if the market goes into, if we're in 2000 or if we're in 2007, either of those 2 years, if we're at the start of that, she's going to get hammered. But we don't know. I don't know. Maybe we're like in 1997. We had the Asian currency crisis back in 97. Remember that, Joel? And they were hammering stocks, hammering them, and it was over. The bull run was over. And then it went up for 3 straight years after that. So stocks were expensive in 97. It didn't matter. They continued to get more expensive. They hammered them down 20, 30%. 97 was an ugly year, that Asian currency crisis for stocks. I can remember the Dow falling like 500 points the one day. And then you think, oh, what's 500 points? Well, the Dow was like 7,000 then. So that was like a pretty good hammering. That'd be like, obviously like a 2,000 point down day or more. So just staying diversified, not all growth, a little bit of value, a little bit of growth, a little bit of dividend income. That's always been the long-term recipe for success. Look who's laughing right now. Berkshire Hathaway. I mean, that's just, Warren Buffett approach has just worked for forever. And he stays diversified. He doesn't pay crazy prices for stocks. He does well in bull markets. He holds up well. He does okay in bull markets, but he holds up very well in bear markets. It's held up pretty well. Burke's held up pretty well so far.
Yeah, it's got that. It's kind of
the Warren Buffett approach is still the best approach.
And this is like, you feel like such a downer when, like, all through the second half of last year, you're like, guys, the party won't always be this fun. It won't always be this fun. And everyone's like, dude, you're being a downer. Stop. But then the time always comes. So
I take so much heat if I'm saying anything bearish, like, why are you so negative?
Yeah.
Why are you so negative, Dennis? Why are you so negative?
You're the positive.
Bear market. Just because you're bearish doesn't mean you're negative. There's a big difference between being negative and being bearish. And yeah, maybe I'm negative. I'm negative in a lot of things. I'm probably more negative than positive. I probably should be a more positive person. Anyway, I needed to go take a course on that. But there are some very positive bears out there. I bet you if we bring Jeremy Newsom on the show here right now, Jeremy shorts stocks, and there's nobody more positive than Jeremy Newsom.
He went cash. He's heavy cash too.
He's heavy cash, and he's probably short some stocks too. That guy is just a good trader, and he reads the tape really well. So, but he'll be talking bearish on stocks. It doesn't mean he's negative. There's a big difference.
Sometimes I feel like the soundtrack.
It's just making a call up or down.
I feel like the soundtrack to Dennis's life is just follows him around wherever he goes.
Well, whatever. It's all good.
No, okay. For those who care about such things, maybe keep an eye on Facebook, Twitter, and Google today. All three CEOs are testifying in front of Congress about misinformation. I don't think that what comes out of that will overpower the general market sentiment, but you never know. So I would again, if you care about such things, Facebook, Twitter, and Google today in front of Congress. Question about Roku in chat, the pre-market or the Benzinga.com chat. Who was it here? Bull for trading. It thinks Roku is at a key level. You guys want to
look? Let's look.
Yeah.
Let's look.
Got a hold. It is at a key level.
Oh man!
I'll say it's
it
at
just
a key
took
level.
out the key level. Yeah, what are you talking about here? 311.
That chart looks like it's going to $200. I'm not joking. I think that stock could be a $200 stock. That's an ugly chart, man. I'd sell any rally in Roku. Any rally. It wasn't rallying in the last. It didn't rally when the Qs were rallying. It was struggling. The multiple. It's ridiculous. And you know what else pisses me off on the Roku? Here, I'll be negative for you because you guys all want me to be negative. I got this Roku. I had two. I got the one, and I'm like, all of a sudden, I can't get, I can't get the Wi-Fi, and I'm like, well, it says I have a poor Wi-Fi signal, but I go to my cell phone, and I'm full bars right beside it. So then I go and I'm looking, online in the forums. I'm like, what the hell's wrong with my Roku? There's a whole bunch of people complaining about them that they burn out after because they run really hot. Then the little Wi-Fi, whatever it is, I don't know. The technical stuff.
Do you have a Roku device, or is it built into your TV?
No, device. The little add-on device. I have one in I have one smart TV that does it too, but I needed a Roku for the older TV.
Interesting.
So, anyways, there's a whole bunch of people complaining about it, and I was like, oh, that's exactly it. They say, yeah, it'll work. And my Roku, if I put it right beside my router, it works fine. But as soon as I get about 6 feet from my router now, it doesn't work anymore. They're like, yeah, you need a new Roku. I was like, this thing breaks after a year and a half? About a year and a half ago. And they're like, yeah, they run really hot. That's what somebody was saying. They run really, really hot. And some of them actually do break fairly quickly. Somebody's saying planned obsolescence. I don't know if that's the case or not, but it's disappointing. I was very disappointed. I'm like, well, maybe I need a different product, that they're going to break after a year and a half. Maybe I just got a lemon. I don't know if anybody else has had that experience with the Roku either. Somebody else just said they've had the same thing happen. But that's disappointing. After a year and a half, they basically just, the people on Roku say, yeah, you need a new Roku. So I buy this product for $50, and now it's broken after a year and a half because it burned out. All right, that's disappointing.
I'll just say, I mean, it's on the lows of the pre-market session, and I see taking out the daily low here. I just go to my monthlies here, and I'm thinking if you're buying it here at 311, then you better stomach it down to 273.79. I mean, that's a monthly low, but look at all these. Man, there's 1, 2, 3, 4, 5, 6, 7, 8, 9 candles of green. I mean, and that's just one of red. Look what it had this. This had kind of faked you out. It went green, red, green, green, and then red, red, red. But this could have another 2 months of downside. Easily see that 273, or you can even figure a retracement in there. So I don't know. Did it get downgraded today, or it's just going down with the market, going down with the ship?
I think it's going down with the ship.
All right, let's do. This guy's asking for pen and boy, oh boy, that S&P top high. I don't know if.
Oh yeah, if that's not the top. They'll look back at that and say the day that got added, the S&P was the all-time.
The day they announced it.
The day they announced it.
Yeah, the day they announced that. That was.
We warned that day. Stocks.
You did. You did. That was a good
There's
call.
quantitative numbers on it. That I'd say the majority of stocks get added, the S&P do not go up. That's been the last 5 years. Tesla was a different animal, but we talked about the arbitrage effects. It's coming out from a bigger component or a smaller index to a smaller component of the big index. There's a net sell. So you can't just automatically assume they go up. PENN, let's look at them. PENN, down 30% since the S&P, or 25%. And again, market effects to a certain extent. Caesar, straight down. GNRC, basically straight down from there. NXPI, which had a different... has held up a little bit better. But again, market effects on this to a certain extent too. But They don't necessarily go straight up just because they get out of the S&P. So if you think that, stop thinking that. It's there's no quantitative numbers to prove that.
Last thing, this coherent bidding war is over. The board has accepted the proposal from IIVI. So here's your numbers, Dennis, if you care about such things.
Sure.
Coherent's being bought for $2.20 a share in cash plus 0.91 shares of IIVI. So 220 plus 0.91 shares of IIVI. That's your fair value for where COHR should trade.
0.91. Okay, I'll write that on my herb sheet. Thank you.
Yep. All right. And on that note, that's going to be a wrap for us. So everyone, please remember that all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Today's show is also, once again, sponsored by inform.info. Go to in4m.info to learn more. That URL is up on the bottom of the screen right now. Biotech Conference Day 2 is today, so this stream is going to end. It'll redirect you automatically to that. We'll be back for at the close show. Until then, everyone smash that like button. A lot of people in chat saying they love the show. Show us some love via the like button, please, and thank you. Joel, I'll see you later. Everyone else, I'll see you later as well. See you at the Biotech Conference, and good luck in your trades, and we'll see you at 3:30 for